Welcome back to the Heartbeat of Money. I'm Jon P. Moffitt, and over the last few episodes, we've explored how the Fed fund rates ripples through banks and credit markets, how housing is being reshaped by institutional buyers like BlackRock, and how tariffs create hidden taxes on economy. Today, we're going to look up, literally to the clouds, because one of the most fascinating and controversial layers being pulled right now in the global economy isn't happening on Wall Street or in Washington. It's happening in the sky, and it's called cloud seeding. And if it works even marginally, it has the power to impact the very foundation of the global commodities, food, water, and energy. So you ask yourself, what is cloud seeding? Let's start with the basics. Cloud seeding is a form of weather modification. You take an aircraft or a ground-based generator and release tiny particles into the sky. Most often, silver iodide is what goes into the clouds. The idea is that these particles act like a nuclei, giving water vapor something to cling to, which can then fall as rain or snow. Sounds like science fiction, right? But it's real. In Texas, cloud seeding programs have been running for decades. Over 20 years, they've reseeded more than 2,400 clouds, generating an estimated $500,000 an acre feet for waters per year. This is enough to cover the entire state and 4 inches of rainfall and about $1.6 million in annual and crop value. In the UAE, they've invested heavily in seeding. Reports show that rainfall can increase by 30 to 35% under clear conditions. Now, here's the kicker. If cloud seeding can consistently shift rainfall, even by a few percentage points, it could change the math for farmers, ranchers, and entire commodity markets. But the question is, does it? Here's where things get tricky. The promise is obvious. More rainfall in drought area means higher yields in crops like wheat, corn, and soybeans. Suppressing hail means fewer losses for barley, canola, and vineyards. And snowpack increase in the Rockies could ease water shortages for the Colorado River Basin. But the pain is just as real. Effectiveness is inconsistent. Some studies show benefits, others say results are statistically weak. Environmentally concerns, silver iodine is considered safe at small doses, but about scaling this globally, what does that do? The ethical question, if Texas makes it rain, but the rainfall was actually headed for Oklahoma, did they just steal the water? So the tension is this. We're talking about a tool that might help farmers feed the world, or might be an expensive science project with unintended consequences. So let's connect this to what you and I watch every day in the commodity prices. Agricultural first. Corn, wheat, and soybeans are the bread and butter of the global trade. Their price swing with rainfall could, if cloud seeding even modestly increases yields in drought-prone areas, that extra supply could actually mean lower prices. But here's the paradox. If rain is artificially boosted in one region but in another, we could see a supply imbalance, winners and losers, creating volatility in the future markets. So let's talk energy next. Hydropower demands on snowpacks. Cloud seeding in the Rockies or even the Himalayas could change the water flow, impacting electricity prices and natural gas's demand. More snowpack equals more hydroelectricity and can soften natural gas price demand in those regions. And livestock, ranchers know water is life. If seeding reduces drought severity, grazing lands improve. That can ease feed costs and stabilize beef pricing. So now imagine you're a trader in Chicago on the Board of Trades. Do you start building models that factor in artificial rainfall? That's exactly where the markets are heading. Cloud seeding is exciting, but let's zoom out because commodity prices aren't driven by just clouds. Driver one, weather extremes. Natural droughts, floods, hurricanes. No human-made system can outpace Mother Nature. Just look, in 2023, the drought in Argentina cut soybean exports by 40%. Driver two, geopolitical, tariffs, wars, and sanctions. Russia's war on Ukraine reshaped the global wheat market overnight. And driver three, energy costs. Fertilizer production is energy intensive. When natural gas prices spiked in Europe, fertilizer output collapsed and global corn prices surged. So let's talk driver four, interest rates and the dollar. Strong dollar equals more expensive commodities for the rest of the world that suppresses demand. Weaker dollar, prices rise and buyers step in. So when we're talking about commodities, it's not one thing, it's a cocktail. Cloud seeding isn't just an ingredient, and it's a very volatile drink. So let me bring this home with a story. Imagine you're a farmer in Kansas and you're starting at starting your first wheat field, and the rain has been below average for the last 2 years. Future prices look strong, but that doesn't matter if your crops burn up in the ground. So now imagine that your neighbor across the street line is in a region that invests in cloud seeding. Their fields get just enough rainfall to harvest. Suddenly they're delivering to market and you're not. And that's not just weather, that's policy. And that's where pain turns into frustration. Because for some, cloud seeding could mean salvation, and for others, it could mean theft. So, can cloud seeding move commodity prices? Right now, the answer is not at scale, not yet. The science is still inconclusive, and the adoption of it is patchy. But here's what I do know. Every single layer we've pulled, whether it's interest rates, tariffs, house policy, or now even weather modifications, has a ripple effect. And people who win in the game are the ones that understand not just the headlines, but what the undercurrents are. So next time you're looking into wheat prices or beef futures or even your grocery bill, remember, somewhere, someone might be flying through the cloud trying to squeeze out just a little more rain. That's the heartbeat of money, and I'm Jon P. Moffitt, your host. Until next time.